Well, good afternoon. It's Webinar Wednesday, and it's a little change today. It's going to be Keith, Brice, myself hosting number 20. I've been involved with these series over the last few months, and Kelly is getting a well-deserved break today. I'll talk a little bit about what he's doing a little later on, but I'm lucky today to have a couple great guest panelists. You'll hear a little bit from them in a few minutes, and hopefully it's a fun program. These webinar series have been really insightful for a lot of the small businesses throughout this pandemic. So I'm proud of the fact that the SBDC has been involved in doing these series. A little bit about the SBDCs. They are, let me start sharing my screen here. They're in all 50 states. There's small business development centers, and we're fortunate to have a phenomenal one here located in Kern County. This SBDC is part of the Central Cal SBDC region. And the test that Kelly had given me earlier is to remember all of the other SBDCs in that region. I know there's San Luis Obispo, Monterey, Modesto, and Merced. I remember those because those are the M's. The one I always get confused is the Fresno is technically the Clovis. The Kern County SBDC is also located in our office here at Mid-State Development. They service Inyo, Mono, and Kern County. It is in my opinion, one of the best kept secrets that the SBA has out there. They have participated in capital summits. I think they have an upcoming capital summit in the near future. They held these capital summits in Kern County, Bakersfield. They've had them in Tehachapi, Ridgecrest, Eastern Sierra. Those are great resources for small businesses out there that want to get a feel for the different financing options out there. These summits will cover traditional financing, SBA financing. They'll cover fintech companies. They'll also look at angel fund type of financing. So make sure that if you're not tied into the SBDC's network, if you're not getting consistent emails, please sign up. There are wonderful programs out there. And the best thing about these programs is they're free. So in many cases, you're getting excellent advice from a number of their consultants throughout the community. I think they're at 35 consultants with just this SBDC with a range of expertise. So I'm earning my lunch today by plugging the SBDC, but we really use them in our organization for a number of things. These webinars wouldn't be possible without sponsors. You can see them on the screen, and I'm proud that Mid-State has been a sponsor from the get-go. A little bit about Mid-State, so I can earn my keep with my board. We're a certified development company housed in Kern County, and we offer what's called the SBA 504 loan program. That's a program used by small businesses for capital purchases. Typically, most of our loans are for real estate, where they are looking at expanding. They may have been leasing at one time. They have the opportunity to purchase a property, or they may be in a smaller facility that they need to expand on that lot or an existing building. I'm happy to say that I have a couple of my partners on as panelists today. I have Valley Strong and Mission Bank. They've been wonderful to work with in our 504 loan program. My last plug with the 504 loan program is our current rate. I have to look to the right because my rates continue to go down, but we are financing small business owners' properties at 2.5 3% for 20 years and 2.4% for 25 years. And I'll repeat that again. It's 2.3% at a fixed rate on our portion. We partner with the bank. The bank typically does 50%. We can do up to 40%. So if you're in need of buying a building or looking at expanding to an additional location, please consider what we do here with the 504. So Kelly's got a sort of a custom that he does here, and he has a poll, and I'm going to run the first poll if I can get it up here real quick. Okay, and this is an easy, in light of the fact that it is baseball season, and Kelly is a diehard Giants fan, the poll that I'm going to ask is, who had the first hit on opening day, April 10th, 1962 at Dodger Stadium? Don't cheat, don't Google, but start the answers right now. And I am not seeing anything, so let's see. I see Mark Smith raise his hand real quick. Mark's raised his hand. Go ahead and go access the poll. So let's see here. Polls. 2 participants raised their hand already. I see 3 popping up here. Okay, we got 3, we got 4%. We got Maury Wells leading. We have Duke Snyder coming in. We have Willie Davis coming. I'm going to end the poll in 15 seconds. Okay, just ended the poll. I'm going to share the results of the poll. We had Maury Wells at 31%. We had Eddie Casco at 13%, Duke Snyder at 18%, Willie Davis at 33%, and you had some said none of the above. Well, unfortunately, this is a trick question. The first hit in the new Dodger Stadium was in the first inning, top of the first, by Eddie Casco of the Reds. So those that thought it was Duke Snyder did have the first Dodger hit, but the first actual hit was Eddie Casco of the Reds. Okay, wanted to cover a number of topics today. And the first one's going to be what's going on with the new stimulus. The second thing is, the PPP forgiveness update. Talk a little bit about Kern Recovers and about the EIDL program. Then I got some great local lenders that we have some questions. And then we've talked a little bit about the poll. So the first thing about Congress, I will tell you, if anybody's been watching the news, here's the good thing, in my opinion. The good thing is Congress and the president recognize there needs to be additional stimulus because of what's going on. So that's the positive, that there's no pushback on the fact that there needs to be stimulus. The challenge is coming up with a bill that will be supported by both sides of the aisle along with the president. One thing that happened on Monday was an intriguing proposal by Senator Marco Rubio. I think it's important to cover this one because there's something in here that I really like. And I'm, again, not going to talk about the $1,200 stimulus because I think that's going to be consistent with both parties. But I'm more really focused in on the legislation that will have an impact on our small businesses. So on Monday, Senator Marco Rubio, who's the chairman of the Senate Committee on Small Business and Entrepreneurship, along with Senator Susan Collins, she's a senior member on the committee, they had proposed the Continuing Small Business Recovery and Paycheck Protection Program Act. Now, what's intriguing or kind of cool in this particular proposed bill is this first part. And the first part is they want to create a guaranteed long-term, low-interest working capital product by improving the terms of the 7A loan for seasonal businesses and businesses located in low-income communities. Which, you know, if you know anything about the PPP is actually a 7A loan. So the 7A loan is one of the flagship programs of the SBA. Well, what's really intriguing about this particular loan is these loans would equal 2 times the borrower's annual revenue, up to $10 million, with a maturity up to 20 years and an interest rate at 1%. Now, again, I got to repeat that. Up to $10 million, 2 times your borrower's annual revenue, and a maturity date at 20 years at a 1% rate. Now, again, if you've been involved with the PPP in the past and even the EIDL, there were initial rates that were first proposed and then modified and changed. So if this program, in fact, is approved, this may be changed, but on the surface, it is a phenomenal loan. Now, there are always conditions, and one of the initial conditions is these loans would apply to businesses with 500 employees or fewer, or have seen the revenue decline by 50% or more in the first or second quarter of this year compared to the same quarters last year. Again, what we've seen in a lot of these programs are the devil's in the details. But again, this is an intriguing loan in that the term is very good. You know, the rate, you know, they could even look at a little higher rate. But the ability to get permanent working capital is really going to be important for a lot of our small businesses going forward. Also part of the bill is they're going to provide funds to small employers that have seen their revenues decline by 50% or more. They can receive a second PPP loan. The bill would limit these second forgiveness loans to entities with 300 or fewer employees and create additional set aside for businesses with 10 or few employees. And again, that's something we've consistently heard, that there is that void for smaller businesses out there getting access to the PPP loan. Also, part of this bill is they would allow businesses to utilize or the forgivable PPP fund for personal protection equipment for workers. You know, as you are getting your employees back, it's important that they have, or the organization has the proper protection is in place. And as those have been trying to buy these things, they aren't cheap. So if you're looking at having to fund that, if you can use some of your PPP funds that could be forgive for that, that's a plus. And the other intriguing thing, and this has been floated around enough, it's like a rumor that if you keep saying it enough, it's going to come true, is that for PPP loans under 150,000, they're gonna look at full forgiveness with minimal documentation. I've heard that on a number of occasions, and I'm going to talk a little bit about what was just discussed earlier this week about the timing on the forgiveness and cover some of that. But if that in fact happens, you know, that's a plus. So again, that's a bill that Marco Rubio and Senator Collins have floated. We recognize that even during this call, they may come out with a mutual bill. stay tuned. I fully expect something to happen. I think August 10th is the deadline before the break. I cannot see them going past August 10th without having something else occur. So hopefully that will happen. So want to cover a little bit about the PPP forgiveness update, and then I'll talk a little bit about Kern Recovers and the PPP and the EIDL update and then the local lenders. So real quick, if you haven't seen this or heard about this, this is a little bit about the process for loan forgiveness. You got to submit it to your lender. Now, these are the days, and we've covered this in the past, but it's important that you understand. The lender can review or has up to 60 days to review the forgiveness application. And my understanding is the forgiveness application has finally been released to the lenders. Talk a little bit about that. But the process is after or when the lender does review the application during the 60 days, then they're going to send it to the SBA. Now, again, my understanding is there's going to be a new platform and a new way for the lenders out there to submit these forgiveness applications. It's important that you know the EIDL Advance, that's that $10,000 grant, is deducted from the forgiveness request. Now, the kicker is you know the SBA has up to 90 days to respond. So you know, worst case scenario, your lender takes 50 days to review it, and the SBA takes the the full 90 days. You're perhaps looking at 140 days before you actually get the forgiveness. The lender's going to notify your forgiveness amount. Keep in mind, we've talked a number of times about the formula to determine the forgiveness, and the lender will notify you that. Now, the remaining balance, and I've said this in the past, I know Kelly has said this before, must be repaid in 2 years. It's not necessarily a bad thing to have a small 2-year note that is at a pretty reasonable rate. So if you're upset that you have a $100,000 PPP loan and you get 90,000 forgiven, then you got a $10,000 2-year note, which isn't a bad thing. Now, those that had gotten their PPP loans, on or after June 5th, they have a 5-year repayment period, and there's an automatic 10-month deferment built into the new ones. Now, if you've gotten a 2-year, or you got the PPP early on prior to June 5th, and you have the 2-year note, the question is, can it be changed to the 5-year note? Only the lender can do that. So you have to, whoever your lender is, you have to go to the lender and see if in fact they are willing to do that. Now, things are a little different if you've got a PPP loan for over $2 million. Those are the ones that are automatically audited, and the forgiveness process is a little bit different. So again, wanted to give you a feel for some of the steps. You've seen this before on the process for the loan forgiveness. The applications are now going to be available. The date that they're shooting for is to start accepting them in August 10th. I will tell you, and the other thing is the PPP is going to end the current version August 8th. Don't know how many lenders are processing applications right now, but you're looking at August 8th is the last time to submit to submit for a PPP loan. Wanted to talk a little bit about what's going on with the EIDL program. Those that haven't gotten an EIDL loan, you've heard me and Kelly say in the past, the EIDL loan is a direct loan from the SBA. The EIDL loan portal is back open. It's open for for all businesses. At one time, it had been closed and only for ag-related businesses. It's now back open. You have until December 31st to put in your EIDL application. I was just on a conference call earlier. Those applications are being processed fairly quickly. They've gotten through a lot of their backlog. And just a friendly reminder, that EIDL loan rate is 3.75%. Also, there's no payments for the first year, and it's a 30-year amortization. Again, I've said it, I'll continue to say it, and I've encouraged a lot of my clients. That EIDL loan is one of the best loans out there. I know they're capping it at $150,000, but still, if you're going to get $150,000 at 3.75, 30 years fixed, no prepayment penalty, and no payment for the first year. If you can apply, it's a very fairly easy application. You should be applying for that. It's a great program. So enough about me today and about what's going on. I want to bring in our guests, and the first guest that I'm going to talk about is Deanna Blaise. Deanna is the Vice President of Member Business Services and Senior Management at Valley Strong Credit Union. She is considered a high performance leader with top production in retail banking, small business lending, treasury cash management, and strategic marketing. Deanna, I don't know how much of your bio I'm going to read because it's quite impressive, but the kind of the cool things are you're a local graduate of CSUB, and you're a PCBS graduate, which is we're happy about that. Deanna, I'm going to have you tell us a little bit about Valley Strong and anything else you want to talk about before we get into some questioning.
Thank you, Keith. I'm just really excited to be here today with everybody. We here at Valley Strong on this business banking side, we reopened our organization last year in August and have just been going like gangbusters, definitely with the PPP program hitting. It came at a really great time for us. So we've been really happy to be able to help so many businesses here in our community that have really needed the support. So I thank you for being here today and happy to be on this panel with A.J.
Okay. Next, I got A.J. Now, you think I stopped at Deanna's bio. I'm only going to probably read the first couple of sentences of A.J.'s bio, but I'm happy the fact that A.J. is one of the youngest bank presidents that I've encountered in my 35, 40 plus years of banking, and I'm really proud to be associated with him. AJ's local yokel, Garces High grad. He's got his Bachelor of Science and Financing from St. Mary's College of California, and he also is a PCBS banking graduate. AJ, I think the young man from the Brewers is a St. Mary's. Burns, is it? I think he's a St. Mary's grad. Had a pretty good outing the other day. So with that, AJ, I want you to tell us a little bit about your organization and anything else I may have missed.
Well, first of all, you're correct. I don't know. I wasn't paying attention to yesterday, but local Bakersfield baseball player that went to St. Mary's and now is one of the best pitchers for the Brewers. So that's fun. Thanks, Keith. And Keith, you've been doing this for a long time and one of the best in our industry. And we do a lot of work with you. So very happy to be here with you. And Deanna, I've known for a long time, and she has a tremendous following in Bakersfield. And so you have a great program, and happy to be here. Mission Bank, all we do is businesses. We're 100% business banking focused. And so the topics that we have today, and especially the PPP loan program, are what we focus on every day. That's all we do. We call it the In-N-Out burger of banking. So, if you want a chicken sandwich or a salad, you're not going to go to In-N-Out. And that's kind of how we are. If you want a home loan or a credit card or an auto loan, That's just not what we do. We focus on businesses, and we think that allows us to do it very well. And we did as many loans to the PPP loan program in about a 2-week period that we would have done in about 3 years. And so we were like Deanna, we were excited to be able to bring those dollars into our community at a very critical time. So thank you for having me.
Okay. One thing that I had, there was a question that popped up, and I apologize for sliding it a little bit, but wanted to talk a little bit about the Kern Recovers numbers, and I had the numbers, and I will tell you, I am happy that the county, engaged local lenders for the Kern Recoveries Program. These guys can talk a little bit about it, but some of the statistics on the Kern Recovers Program is the $25 million that was allocated is fully allocated. There were over 800, I think it was 809 businesses that got these applications, that got funding. I think the average was about 27,000. So you can see that the Kern program really helps some of the smaller businesses. There's always the question that we've been receiving, will there be some more money for that program? That's a county kind of decision, and obviously there are needs for small businesses out there, but there are also other needs in the county. So hopefully there may be some more monies that will come. I think Jim Zervis and the county's done a wonderful job with that, and you're going to have my lenders are going to talk a little bit about what their experience with the program was. So want to start with getting into some of the questions. And this is something, the first question is sort of a frontline question, because I talked to a lot of lenders out there about how it was like, but I want you to hear it from these guys. So give us a feel for what it was like to be a lender when PPP was first rolled out. And AJ, I'm going to start with you.
Okay. I've never been on the front on a firefighter, so I don't want to say that I know what that experience is, but I can imagine that's what it was like. So there was tremendous uncertainty. The information from the government was changing by the hour, and we were trying to figure this out in a very in 2 or 3 days, how to implement the program. And the thing that I first of all, I think it was a great program, and it was phenomenal that Congress passed it so quickly, which is kind of not their usual mode of operation. But the one thing that they did, I just wish they wouldn't have said that the funds were going to run out, because from the very get-go, they were messaging that the funds are going to run out, and when they're out, they're out. And that just created this mass hysteria where nobody wanted to be the last person. It'd be like playing musical chairs and you were the one person that didn't get a chair. And so that just created this panic for business owners and for the bankers. And we're getting questions from business owners, and our reputation is really being able to deliver the right answer. We're going to tell you what the process is and how to do it the right way, but we couldn't do that because they were changing their mind, and the guidance was in some way, in some areas, contradictory. They'd say one thing at 10 a.m. and then by 2 p.m. they had already reversed their decision. And so it was crazy. Our people worked in some cases 12, 16-hour days, 2 or 3 days over the weekend to get as many of our customers into the program as possible. Which we were very excited. We got about 40 million done in the first weekend. And now the funds ran out. We got into the second round of funding, and now the money's still available. So in hindsight, it was never going to run out, or at least with the second round of funding. And so I think if they had just changed that one thing, then people could have relaxed and said, let's just do this in a more manageable amount of time. That would have been much different. But the way it worked out, it was It was wild. I've been doing this 20 years and I've never experienced anything like it. There's nothing else I can even come close to comparing it to.
Deanna.
I could not agree with AJ more. I mean, I really wish the SBA or the government would have given us at least a week before they had said, okay, go see your lender on April 3rd and they'll have it all figured out. That's really what made it very difficult, I think, initially. We too were going like gangbusters just to get a system in place in order to accommodate the applications. I mean, one thing we had going for us being that we were new to starting business banking last year, and we're just now building our portfolio of business customers. That's where I think we had, a little bit different impact as, versus an institution like AJ's institution, where you have a vast majority of business owners already in your portfolio, and they're expecting you to be there to assist you right away. So one thing that we did see, I think, come out of it, as a positive in being able to help businesses that, maybe other institutions, just because of their large portfolio, they weren't able to get to everybody. And I think just the mass frenzy, had we had just a little bit more leadway, that would have been much appreciated, so that we could, present a better picture of what this was going to look like to business owners, because they're already being faced by COVID. They're already completely stressed out. I think it really added another element of stress that probably could have been avoided for the business owner and, financial institutions out there that were really trying to, I think, aid these business owners and reassure them that, we could help them through this process. But it was like building the airplane in flight. And I think we've been able to work ourselves through it, definitely, and end up with a flying plane at the end. But it wasn't for the lack of really trying to build as you go right out of the gate.
I do, just little comment. Since I had been in the financial lending business for a number of years, we've always been accused of having what's called banker's hours. I will tell you, for the first at least 30 days, there was not a lender that I knew that wasn't working Saturday and Sunday. Mm-hmm. And I know both of their organizations had their staff, and keep in mind, we're working under a COVID environment. So I applaud you guys for stepping up and having your staff do a great job. Want to go on to some specifics. So what were your PPP numbers, loans, averages, existing and new customers? And I'll start with you, Deanna.
For us, Keith, we saw approximately about, I want to say 500 or so applications that actually came in on the PPP side. In the first round, we had a different process that we used. In the second round, we took a different approach to smooth things out. The loan size of it, again, being that we were an institution building portfolio, we ended up doing just almost 16 million in loans on the PPP side. And our average loan size ended up being right around 50,000 to business owners that were out there. I would say, the average customer, we did see even some very small on the independent contractor side, and small as like $400 actually coming through. So we saw anywhere from that, anywhere up to approximately 2 million. We didn't see any loan sizes over that in our area of the PPP program. So really it was the small, really business owners that we were seeing come through our doors. And that could be held true to, being that we are a heavier consumer oriented organization. We saw a lot of sole proprietors that came in with those numbers. I would say most of those business owners were employing either them self-employed, or typically we would see anybody with businesses that had 25 or fewer employees. So we truly, from what we saw, were really that small business owner.
Thank you. AJ.
So the statistics for Mission Bank, we did just over 700 individual loans for a total of $125 million worth of PPP loans. The median loan for us, so that's the number where it's directly half of 700, was 70,000. So half of our loans were less than 70,000. 95% of our loans were less than 350,000. Our smallest loan was $1,200. Our largest loan was, we had one that was $5 million. And so that was by far the largest, because I just gave you the statistics. 75% of our loans were to existing customers of Mission Bank, and then 25% were to new customers of Mission Bank. And we kind of extrapolated the numbers because this was all about payroll and head count for the business owners. And so we think it's somewhere around 10 to 12,000 jobs that we've funded payroll for about 2 months on about 10 to 12,000 jobs.
I'm glad, AJ, I'm glad you put that up, because sometimes we get lost in the dollar amounts and loans and names, but the real intent with the PPP is payroll, and payroll means jobs. So I will tell you, to put on the kind of volume that you guys did in such a short period of time, people don't realize that doesn't happen. It does not happen. It doesn't happen with credit unions, doesn't happen with independent banks, doesn't happen with major banks. So that's impressive. So now I talked about earlier, they're talking about another PPP. What's your thoughts? And I'll start with you, AJ. What's your thoughts about participating in another round of PPP?
I mean, the longer the quarantining goes and the restricted access, I mean, we're all doing much less activity, spending less dollars in our economy. So the longer that goes, I think it'd be a great idea. I think the program itself, other than that compressed time frame and kind of scaring everybody into thinking they may not get their loan amount, was very well done. And now that we know the rules, I think we could tweak them a little bit, but as long as they keep them fairly simple, I think that's a good thing. And I think for most of our customers, if there was a second round and we said, hey, is this still important? Is this still something that COVID and the pandemic is affecting your business, and this can still be very useful and provide money to keep your payroll going for another couple months or some other period of time, I think most of them would take advantage of it. And that's one of the, I think it's a really good way of providing stimulus to the economy. And I think most of our customers would take advantage of it.
Deanna,
yeah,
your thoughts?
I would agree with AJ. I think depending upon what industry the businesses are coming from, some still have not been able to fully open. We've had some companies that, continue to thrive or pivot their strategy to figure out how can they survive during this situation. Definitely, I think for business owners that are trying to sustain their payroll and bring people back so that they can continue to kind of reinvent themselves, I think that would be really important for them to be able to have some of these additional funds to do that. And we would certainly be open to assisting these businesses that do need it. Now, we are still continuing to take the PPP loan applications at this time, but it really has been a trickle. So I think, along the lines, something that AJ had said, am not sure, how much demand, again, depending upon the industry that's heavily impacted, that is going to demand some additional funds. We have had business owners asking if we think there's going to be a second round. We're waiting to see if that's going to happen. So I do believe there's a need, but maybe not as significant as most people may think.
So you may have answered a little bit of this, but I've heard a number of organizations talk about maybe outsourcing the forgiveness piece of it, given the volume that the staff has to deal with. Deanna, how are you guys preparing for the forgiveness?
We are going to more than likely use another fintech type of application process through an online application. We did that in our second round, and it was really a great way for people to apply. It was an electronic application, and what we're looking to do is have an electronic forgiveness application as well. And we would still, as a lender, take that information in, and we would still be the ones that are evaluating each member's situation before submitting over to the SBA. Like I previously said, we feel that that's the most effective way, but we have been holding off on putting that platform in place, pending to see if SBA is going to make any additional changes, or if we hear, that the applications below 150 is going to be approved. We still don't know, even with our fintech, if they will have to go in and do some additional programming. That's what's made it a little bit difficult to be ready to go, by this, say, August 10th deadline. We've also talked that we don't know as an institution that we want to be the first round of institutions through with this new platform that the SBA is directing us to use for the forgiveness piece of it, until we can be completely comfortable that that's going to be a smooth process. I think there's still a little bit to be learned about what that platform instruction is going to look like. And I think us as lenders are preparing to figure that piece out actually in the coming days, that that's going to be released.
AJ.
Keith, we did the opposite. So we have hired a group we have 6 people that we call our PPP loan forgiveness specialists. And so they're going to work with our customers, and we have a simple deal. You answer a couple questions, give us a couple documents, and then we're going to complete all the paperwork for you. We will send it back to you because our customer will ultimately need to sign off on it and validate it. But we're going to do the work for our borrowers and then submit them. I agree with Deanna that until we actually have one go through this new third-party portal, we won't be real confident in how it's all going to work. We have already done the legwork for 20 of our customers that we called our beta test, and we're going to start tomorrow on the next, I think, 50. And so that's how we're going to do it. And we'll be ready if they open it up on August 10th, we'd be ready to submit most of our customers by then. But we'll wait and see.
Here's the good thing that I just heard is you just heard 2 different ways that it's going to be done. So you do the multiplier with 8, 9 other financial organizations. So it's all going to be somewhat different in the process. The core application is going to be standard with everybody, but how they're going to process it is going to be different. So for those that are out there, I think you're still going to need a little bit of patience. And I said that at applying for it and applying for the forgiveness, patience. It may work to your advantage if you're the last one asking for it. Any thoughts? And I think both of you guys covered this on, how you would have done it differently. Besides, hey, we're not going to run out of money. Any other thoughts in that area that you guys would have done it differently? AJ.
That's the main thing. We could have taken those long nights and Sundays and just smoothed it out. So that in hindsight is something we would have done differently. Also, I think that's it. I mean, we were excited that we got some of the loans approved in that first weekend, and so in the time frame. And with the information we had then, that was motivating us so that we could get as many of our customers through there. And so I wouldn't necessarily do that differently unless I knew in advance that the money wasn't going to run out. So I can't think of anything else. Yeah.
Yeah, I was just going to say the only thing that I would like to see some improvement on. And who knows if, I really hope we never see something like this happen again. But the E-Trans system, there are a few things that are very specific in that particular program. In order for this to be successful, we had some business owners that ended up with duplicate applications that, felt that they were stuck and not getting movement at another institution. And it made it really difficult to help those business owners where they had let's say, pretty much an approval somewhere else, but were getting no traction. I wish there would have been a better way to allow the business owner to back out of that if they weren't able to move through quickly, because again, it caused more stress to people that were just trying to apply for the funds before they ran out. But that specifically, the E-Trans system only allowing, obviously on purpose, one loan per borrower, we did see quite a few duplicates that made it difficult to get them through. So if that could be smoothed out in any way possible, if we do see a second round, what is that going to look like, and how will they get through the system? So that's one question I would have, not almost doing differently, but how is that going to work with a second round?
Deanna, I will tell you the SBA, and we're an SBA lender, so I'm somewhat biased. They did a phenomenal job of rolling out this program in such a short period of time.
Oh, completely agree.
Significant issues, you betcha. I think going forward, and I agree with you, hopefully we don't have to deal with this again. But it was a good lesson in how do you ramp up a major program in a short period of time with either an existing platform, new platform, existing policies. So I think it was a learning curve for the SBA and definitely for Treasury also.
Agreed.
Early on, and I think there was something that came out recently, there's been some fraud with the PPP program. Have you guys had any problems in anything that you guys have done to prevent it at your organizations?
Keith, I could start there. One thing, I think every institution probably looked at this a little bit differently. Requiring obviously an account and really making sure that we vetted applicants who maybe were new to our organization. That's one method that we did use to make sure we were looking at individuals who actually were the owners of those companies, and making sure, knowing our people that are applying. I think that does make it a little difficult, maybe at a large scale. We have not seen any of that here at our institution, and grateful that we didn't see any of that this far.
Yeah, I don't think we had. I can't tell you. There would be very little way we could say with 100% certainty, but we know all of our customers. We do it, like I said, kind of the old-fashioned way with a phone call. We all had to pitch in. So I went back, Keith, as you remember, and became a lender. So I funded probably about 20 of these myself, where I was the one working with the business owner and, walking through the application and gathering the data. And so I don't think we had any fraud. And I would say that probably applies to most all of the banks. I think there's got to be some fraud out there. There's going to be some bad actors in any situation, but my intuition is just a very small percentage of the funds that were given out.
So just pivot a little bit, PPP has been dominating, the financial organizations and the news and everything for the last three plus months. How's your non-PPP related business?
For us, it's been very good. Our deposits are up over 200 million. So for us, that's over 20%. And in the industry, if you grow in the high single digits, you're really doing well. And our non-PPP loans were up right around 6%. So that puts us on pace to, over a 1 year period, because that's roughly half the year, to be in the double digits, 10, 12%, if you just exclude all the PPP loans. And so that's a very good number for us. We opened up a new office in San Luis Obispo right in the middle of the PPP loans and the pandemic. And so that was its own challenge, but that office is already funded $30-something million in loans. So we're excited about that.
Yeah, Keith, on our side, June was probably one of the better months that we have had even pre-COVID hitting. Our other related business, we still have business lending that's going on that's definitely non-PPP. I think there are some great opportunities out there for businesses, or whether it be investors in the market as well, that we are seeing. Us as an institution, we are expanding up north. We continue that expansion up the Central Valley, and we're still continuing with that. And I think the time will tell, because of, I know we had some other questions here. There's been a lot of stimulus put out there. Our deposits are up as well. People early on were doing some deferments. So I think the jury's still a little bit out to what the fourth quarter is going to look like. And we're watching that very closely.
Real quick, you guys were one of I think 4 lenders that the county approached about the Kern Recovers Program. Quickly, why did you guys decide to participate in it?
For us, we really wanted to, really piggyback on the opportunity to help our businesses here in the community. We could see the need that was out there when this program came out there to participate in. We were excited to be able to offer some assistance through that program. And because we'd had gained so much of the knowledge running through the PPP program, to be able to emulate something like that, we were happy to be able to offer that assistance to the county in order to participate. So we were happy to do so.
Yeah, when the county first thought of it, Jim Zervis and the rest of the people of the county, I was extremely excited, and very entrepreneurial way of behaving, which is not usual, is not always typical of a government agency. So I was excited about it. Just like the PPP loan funds some of these businesses literally kept their doors open during that time frame. And at the time they made the original decision, we were still in the period where we thought the money from the PPP loans was going to run out. And so this could have been kind of a replacement for that program, or allowed borrowers that were excluded from the PPP loan program to get access to some funds. In hindsight, that didn't happen, but in the moment, we thought the PPP loans were going to run out. And so we were right there with Deanna and Valley Strong and a couple other institutions ready to help as many businesses as we could.
Real quick, what were your numbers, AJ? What'd you guys do?
So far, we've done 75 loans for $3.5 million. We have another 29 loans for $1.7 million pending. And I think last night the county approved another $5 million. So I think we'll end up funding those remaining loans here in the next few days.
Deanna?
We did 455 loans at 11.2 million. We actually sent out about 1,344 applications. And of those that came back in were about 597. I agree with AJ that, we had some others pending the county potentially releasing funds. We have another probably like 4 million ready to go already if that was going to be released. So we did see quite a few come through. We did add on some additional resources to be able to accommodate that, but processing that was pretty phenomenal in a short period of time as well.
So any thoughts? I think I jumped. Any thoughts on where interest rates are going to go? Rates have been so stinking low, and I should say stinking low. If you're a borrower, it's great. If you're a lender, it may not be that great. But I for years I kept saying rates are going up. Rates are going up. That doesn't even come out of my mouth anymore. So any thoughts on interest rates now and in the future?
You know, Keith, I'll just start out there. I think they're going to remain low for quite some time, especially given, you know, the recession potential that we're headed for. I don't anticipate we'll see any recovery late next year, if any. I don't know how AJ feels about it.
I agree. I don't think they're going anywhere anytime. Banker and the CEO of Mission Bank, it's not good for our business, right? Our margin is significantly off from where we thought it would be. But as a consumer, I just refinanced my house with Valley Strong. We don't do mortgages. So I just tell people take advantage of it. I don't think they're going to go anywhere anytime soon.
Okay, Deanna, you alluded to it earlier in wondering what's going to happen in the fourth quarter. Any thoughts on defaults? I know at Midstate, you know, we're looking at our portfolio and we've pulled out industries that have been impacted, and you know, a lot of them have received, you know, PPP and deferments and payments, but when that ends, you know, something's going to happen. So any thoughts on your default rates and your loan portfolios?
Sure. You know, right now, what we're seeing, we're at a really low default rate right now, probably lowest than we've seen in a long time, but we just don't know if that's going to hold. We're at like a 0.39% default rate right now. We took in probably 2,578 different extensions on deferment, really here at the credit union, and that's obviously just in this market here in Kern County. So when those come off of deferment, which they're getting ready to come off of that, you know, that could line up potentially with the stimulus that's there. We've also done some cross section of, you know, what types of deposits are holding in those accounts that may be impacted for people that did ask for deferment. People are holding reserves right now because I think they don't know what to anticipate is going to happen in the next several months. So I think it's still a little bit early to tell, but we are anticipating to see an increase in default rate, depending if, you know, the lockdown is going to last much longer than it looks like it's going to. I think it's still a little bit difficult to see what the crystal ball is going to look like. I think fourth quarter may be a little more telling. You know, if we have another one of these sessions, we come back on and see where we are. We may be able to see where it's headed a little bit better.
Keith, we have not seen any change in our defaults or people not paying us. We did offer a loan deferment program, so about 20% of our customers, 130 million, elected to, they could skip 3 months, so 90 days worth of payments with no issue, no penalty. And so the first wave of those loans, the payments actually resumed in July, and 100% of those customers made their payment. And then we'll have the next wave in August and the next wave in September. So right now, we're not seeing a change, but we think it's inevitable. So we are taking some steps to, we're being cautious, and for us, we're adding to our loan loss provision at a higher percentage than what we had planned to do at the beginning of the year, because we think some level of default is inevitable, and that's as much as we know right now.
So we get, you know, we got a few questions coming in. I'm going to ask you 2 more questions, and we're going to go to the live questions, if you don't mind. So we're getting pretty close to the top of the hour. Real quickly, there's always winners and losers in any financial crisis. You know, we're seeing in Midstate tech companies, they're coming in. So what are you guys seeing as who's out there doing well?
I would say some of the cleaning companies and some of the healthcare providers, fintech, I would agree with you on that, Keith. It's definitely interesting to see. You look at Zoom, what happened to Zoom with this whole COVID situation hitting. People are figuring out how to reinvent themselves. And I think we're going to see a lot of disruptors come out there with this. New things happen when crisis hits.
Yeah, one interesting area that we've experienced, one is certain restaurants that are geared up for takeout, they're actually more profitable because they've seen a lot of business and their cost structure is less. And I don't think that's necessarily true for all restaurants, because I think they're one of the most impacted with obviously not being able to go out and go to restaurants. We have one hotel, and it's seen an increase in business because they have the extended stay model. So people are going there to be isolated and be in a safer environment as far as quarantining. So most hotels, I think, are not doing well because travel is so much less. But that particular type of hotel is actually has been doing well in the last several months. So those are two things that we've seen. And then, like I said, the tech, which we don't have too many customers that fall into that, but I think that's probably true.
Okay. I got a couple questions that came in, and I think we've answered some of it. One of the first ones was, can you still apply for a Kern Recovers program? I'm a small business owner, bridal store. I think what I heard earlier is that the county decided to potentially add another $5 million, but it also sounds like there are pending applications. So without panicking anybody, I don't know if I would call the 4 lenders that participate and see if in fact they're still offering the applications. Is that a pretty correct answer, guys?
Yes.
Okay.
Yes.
Let's see. What if I got a denial from the lender but an approval from the SBA? How does that work as far as forgiveness goes? Some of these questions we're going to have to probably take offline because they're specific to the program in the industry. So I just want to I want to end with one question that I had is that how are you guys operating during COVID? Your employees, what are you guys doing?
Keith, on our side, we remained open. Obviously, you can see out there when we had a positive case, you probably saw out there in the community where we may have had to temporarily close a location to do deep cleaning. We've installed plexiglass, require face masks in order to keep our team members safe, as well as members coming in to do business at our locations. We saw more business through our drive-up sections. We also ended up splitting our teams in between like an A and B team so that us ourselves can make sure that we remain open and have the appropriate staffing to do so. We did even split up some of our contact center employees into different locations so that we can remain open and not have some cross potential contamination between employees, and keeping people separated so that we continue to rotate that. And that's really helped us remain open and available to our members in the community. And we've been able to sustain that thus far.
Thank you.
We've done very similar things. So our front line, which is the business banking centers where the customers come in and make deposits, most of our staff are there. There are a few business bankers, relationship managers in each location that are working from home. And we're doing all the things that we can do to keep our team members and our customers safe, as Deanna mentioned. And then our back office staff, so the people that you don't see as a customer, are probably about 90% working from home. And the rest are we have 4 people working in a building that was designed for 30. And so we feel like that's safe also.
Okay, thank you. Well, I want to thank both of you guys for taking time out of your busy day to participate in this webinar. These are fun. I'm pretty sure Kelly's going to want to have you guys back. Hopefully it's not under these same circumstances. I really appreciate, and this is something I've said to all of our lenders. I really appreciate what's been done by our lending community during these times. Everybody stepped up, worked hard. You guys represent 2 wonderful organizations. So I will give you guys some parting words if you want to say anything else about yourself or the organization.
Right, yeah.
Oh, thank you, Keith. Really just we want to be there for our community and really happy to be an institution that's been able to be there and support the SBDC as well. I just really want to thank the SBDC for all these webinars that Kelly has performed, that you've participated in as well, Keith. I think the consulting to the business community is really what's helped them through this process as well. And I think as we all continue to work together to support our community, that's what's going to be the most meaningful to keep people's businesses open and keep people employed. That's what I think where we win and help people recover through this.
If you think about the most essential of the essential businesses, first has got to be healthcare, right? At a time like this, we need hospitals, doctors, nurses, and we need to keep that going. And then right after that is the financial sector, because if banks shut down, I mean, you can't access your bank accounts, money's not transferring on debit cards, that just can't happen. And so I know that the team at Valley Strong is doing this, and our team has been motivated by that. And so, we're those long hours during the PPP loan process, and even just the extra things that we have to do now to just stay open during the pandemic is well worth it, because we're feeling that need in the community. So that's been a really purposeful thing for our team. And so we're going to keep doing it as best we can. And Keith, anytime you ask me to do something, I always say yes if I can, because you're one of the best. And so I appreciate you having us on, and keep doing a great job.
Okay, thank you. Well, next week Kelly's going to be back.
Okay.
Hopefully he is. He's actually during strategic planning, and I know he's going to listen in and critique what we've said. Next week we may have further information on a new stimulus bill and more good things to come. So, on behalf of the SBDC, Midstate, and Kelly, this is it. Thank you, guys.
Thank you.
Bye, everybody. Thank you.